Welcome, and thank you for joining me. I'm Tony, a licensed realtor associate in Jamaica and founder of Jahwell Real Estate. I created the Jamaica Property Playbook because I saw so many buyers, investors, and members of the diaspora feeling overwhelmed by the process of purchasing property from overseas. There are a lot of moving parts, important decisions, and questions that often go unanswered. My goal is to help simplify that journey and provide practical tools, resources, and guidance so you can move forward with greater clarity and confidence. Before we begin, make sure you have your property playbook nearby, as we'll be referencing several worksheets throughout this module. And if you haven't downloaded your copy yet, you can find the link in the description below. Now let's dive into Module 4 with Rochelle.
Welcome to Module 4. In the previous module, we focused on preparing financially for your purchase. Now it's time to think about something just as important. What is your investment strategy? Because not every buyer has the same goals. Some people are purchasing a family home, others want monthly rental income, some are investing for retirement, while others are focused on long-term appreciation. This module is designed to help you identify the strategy that best aligns with your goals. Let's begin with the glossary. Before we start filling out the worksheets, let's look at a few investment terms you'll see throughout this module. One of the most important is yield. Yield tells you how much income a property produces each year compared to the amount you paid for it. Investors often use yield to compare different investment opportunities. Here's a simple example. Imagine you purchase an investment property for 20 million Jamaican dollars. Over 1 year, that property earns 1 million Jamaican dollars in rental income. To calculate the yield, divide the annual rental income by the purchase price. So in this example, you would divide 1 million by 20 million. The answer is 0.05, or 5%. That 5% is the property's annual yield. The higher the yield, the more income the property generates relative to its purchase price. For investors looking for consistent cash flow, yield is an important number to consider. Another term you'll hear often is appreciation. Appreciation refers to the increase in a property's value over time. For example, if you purchase a property for 20 million Jamaican dollars and 5 years later it's worth 25 million Jamaican dollars, the property has appreciated by 5 million Jamaican dollars. Notice the difference. Yield measures the income a property generates while you own it. Appreciation measures how much the property's value increases over time. Some investors prioritize a higher yield because they want stronger monthly income. Others are comfortable with a lower yield today if they believe the property's value will appreciate over time. You'll also come across terms like capital growth, short-term rental, long-term rental, exit timeline, market value, and comparable sales. Don't worry about memorizing every definition today. As we work through the exercises in this module, these concepts will become much more familiar. And remember, you can always return to this glossary whenever you need a quick reference. Now that we've covered some of the key investment terms, it's time to start thinking about your own investment strategy. Now let's turn to the investment strategy matrix. This worksheet is designed to help you compare 3 common real estate investment strategies. As we walk through each one, you'll see the return potential and the level of upfront effort appear on the worksheet. Let's start with land banking. Notice that we've rated the return potential as medium to high. That's because land can increase in value over time, especially in areas experiencing growth and development. Now notice the upfront effort has been rated low. Once you've completed your research and purchased the land, there's generally very little day-to-day management involved. Next is the short-term rental strategy, such as an Airbnb. You'll see we've rated the return potential as high. A well-managed short-term rental can generate strong monthly income, particularly in areas with consistent tourist demand. You'll also notice the upfront effort is rated high. managing reservations, communicating with guests, coordinating cleanings, maintaining the property, and keeping up with local regulations all require time and planning. Finally, let's look at the long-term rental strategy. Here, we've rated the return potential as medium. While the monthly income is often more predictable than a short-term rental, the returns are typically more moderate. The upfront effort is also rated medium. There is still work involved in finding tenants, maintaining the property, and managing leases. However, with a reliable property manager, much of that responsibility can be delegated. As you review these strategies, ask yourself 3 simple questions. Which strategy fits my budget? Which strategy fits my timeline? And which strategy matches the amount of time and effort I'm willing to invest? Remember, there isn't a right or wrong answer. The goal isn't to choose the strategy with the highest return. The goal is to choose the strategy that best aligns with your financial goals, your lifestyle, and your comfort level as an investor. Take a moment to review the worksheet, then circle or highlight the strategy you'd like to explore further. This exercise will help guide your property search and keep your investment decisions aligned with your long-term goals. As you complete this worksheet, remember, every successful investment starts as an idea. The purpose of this exercise isn't to build the perfect plan today. It's to move your vision from your imagination onto paper. Because once you can see it clearly, you can begin planning for it. Your seed doesn't have to be big to bear fruit. You simply have to be willing to plant it. Congratulations on completing Module 4. You've explored different investment strategies, compared the opportunities available, and begun creating a vision that aligns with your goals, your budget, and your lifestyle. Remember, success in real estate isn't about copying someone else's path. It's about choosing the strategy that's right for you and taking intentional steps toward it. In our next module, we'll shift from planning to protection. You'll learn the legal steps involved in purchasing property, the professionals who should be on your team, and the closing costs you should prepare for before you buy. I'll see you in Module 5.
That was a True Hustle production, where vision meets action.